7:18 a.m. Pacific Standard Time. Today's date 9/15/2012, and we're going to take a look at FCX, gold and silver. And what I have is a weekly chart before us. We have totally stated that when QE3 would come on board, that this beaten down stock needed to be bought down here when FCX would not break the weekly bottom, and that is a multi-weekly consolidation. You can call it a major support level because it is. And when we got up above the short-term resistance right here above $35, this particular name in 2012, 2011, it got taken to the woodshed, and we were short a lot of months on the name. However, with QE3 being injected in the system, this just won't happen over the next couple of weeks. But what will happen is that the gold and silver play is back on the table. And what that means is when we take a look at this very long from the 2011 high, cutting right through here and coming right across the 2012 highs, we have broke what we call the bear side of this trend, meaning that now that we're above this long-term diagonal line on a weekly level with weekly moving averages pointing up and the 20-week moving average flattening out, we're about to tell you here, MMTs, that this has always been the leadership stocks. When this particular sector acts right, it's always going to be in this sector, and FCX is in here, and it's a CRX.X. Okay, we'll be taking a look at where the major wall of resistance and how you would fade back moving forward, because the Fed just stated they're going to print an unlimited amount of money, keep rates down. And when you do QE3 and the dollar gets trashed, and there's lots of other things that are involved, we will tell you key specifically that we will go higher in gasoline and oil and commodities over the next 6 months to a year. And that this particular market that's been out of favor all calendar year is, now that we have that QE3, there's going to be lots of commodity related type of names that were in extreme bears and out of favor, have consolidated and now have coming back to life. So when FCX pulls down to test the moving averages after a 2-week breakout right along with other markets, is how we go from a bull to, or from a bear back to a bull. We went from a bull to a bear, and we're finally coming out of here now where this name can be bought during the day. And this I will show in the video here, the price ranges for the MMTs. And we look at using longer term call structure. Money flow on this was 96 million. It was a $1.09 range. It's not as high beta as it used to be in dollar intraday price range. However, the pullbacks will be bought. What we will end up doing is using the long-term call strategy and a lot of these beaten down commodities names with the Fed around the whole area. The Fed has created a new type of stimuluses that people didn't think we were going to get, and this leadership here, this is the leader. They've consolidated. They've got the low end here of 36 on the weekly level right up here. This is called a 100-week moving average at $44. This will be the major resistance area. Once again, I will go over with the MMTs using very longer term calls and puts that go out into 2013. And I will be updating in the next video some other key stocks that are of choice of leadership. This will be one that definitely benefits. You will buy the dips, sell the rips, go through the consolidations. The Fed is behind it. This thing can break 52-week highs over the next 6 months.